I like this HPQ.
Little Hewlett Packard?
Yeah.
I haven't looked at it.
I think it's so badass that Warren Buffett buys the worst tech stocks, yet he still does awesome in them. See it over and over again.
Hola, compadres. It's your boy, Chicago Sean McLaughlin, joined by Steve Strazza, the head technical analyst at All Star Charts. Steve, how was your long weekend?
It was great. I feel like it lasted forever, though. Is it
now that you have a pet, you got a cat, did you celebrate Father's Day?
Why? Because I'm a cat dad?
Yeah, you're a cat dad. You can own that. Don't be ashamed.
I tried. My girlfriend wasn't having it. I did. I tried to have a celebration. Didn't work.
Oh, well, I attended 2 concerts, had a nice Father's Day, had a great picnic yesterday. It was just a great weekend away from the markets, most importantly, because we needed a little refresh.
Happy Father's Day to you and all the fathers out there. I feel like that's what you should do on Father's Day. You got to go to a concert, Grateful Dead, right? Do what you want.
Dead and Company. Dead and Company. It was great.
You went back-to-back nights?
I went back to back. I wasn't planning on it. I had tickets for Saturday night, but a free Friday night ticket landed in my lap the day before. I'm like, oh, okay, I guess I'll go.
You're such a good hippie.
All right, let's get down to business. Before we jump into the option stuff, we've been talking about this all morning. We have to bring this up. Let's pull up Strazza's screen here. Strazza's got a Bitcoin chart that we have to talk about. I mean, this is crazy. The chart we've got up here. Well, Strazza, why don't you walk it through? What are we looking at right here?
I mean, in my career, we look at a lot of funky stuff for sentiment. JC's all over the magazine covers. So anybody who follows us knows about those. But like, have ETF or fund launches, has there been any better information from a sentiment standpoint? And we see this time and time again. Some of the most recent examples that stand out are like them delisting the coal ETF at the lows in 2020.
I love talking about that.
And so now with Bitcoin, they finally figured out a way with regulators to launch a pure Bitcoin futures ETF. That was literally when prices peaked last fall. Now that everybody's bearish Bitcoin, can't figure out, how to get out of it or how to hedge against it or how to short it, they're launching a short Bitcoin futures ETF.
And literally launched today.
Right. So
after Bitcoin is down, 70% from its high?
Yes. It's lost 2/3 of its value.
So if you look at that chart, now I'm a little confused. You got 2 red arrows there at the top. Which one points to October 21st?
The second red arrow.
The second red arrow. So I mean, you can't draw that up any better. I mean, look at the timing of that. They literally by a week top ticked the market. And are they doing the same thing now at the bottom? I mean, wow.
Listen, and that's like what I was kind of alluding to when I was saying this weekend felt really long, right? Because there was one moment this weekend where I was looking at my screens. I was probably looking at my screens way too much this weekend, but I was excited. I'm ready. I'm ready for some relief rally here. I think crypto is super interesting right now. I looked at the charts Saturday night, and I was like, oh boy, it's over. It's over for risk assets. I woke up Sunday morning, like, oh, maybe it's not over. But Bitcoin, hard shakeout. You could see it in the lower wick right here on this. This is a weekly candle, right? So we shook lower hard below those 2017 highs, call it 20,000, 19,000, whatever. I think we hit like 17 and change, ripped higher. By the time I woke up, it was at like 2021. So I think that's like super constructive action for crypto. I want to see Ethereum reclaim their same equivalent highs.
Right. Now, we're not going to sit here and say that we're going all in on Bitcoin right now, and this is the bottom. But boy, would that be beautiful if this turns out to be the bottom.
And honestly, I've been following you. I know what your strategy for Bitcoin is as a long-term bull, and I love that. I'm going to start doing more of that and allocating just a percentage of my monthly income and putting it into Bitcoin and Ethereum here, because I think we're at bargain prices. Sure, we can go to 10, we can go to 7. I'll be buying the whole way down. That's fine. But you've been dollar cost averaging into the space since last summer. When did you start?
Since that first red arrow there at the top. I bought the top, and then I was like, "Oh no, I bought the top. I am the guy that caused the top." And then, but I was dollar cost averaging all the way down. Then came all the way back up. I was feeling like a genius,
Right.
but now once again, I'm feeling like a heel. But that's okay. I'm in it for the long run.
Are you the one who put the floor in Bitcoin at like 18 this weekend?
Maybe I did buy some last week, so we'll see.
So I'm going to start dollar cost averaging in both Bitcoin and Ethereum. They've really shown people that those are the bellwethers in the space. They're the Apples and the Microsofts, right, of the crypto space, Bitcoin and Ethereum. So I think this is a really nice area to start wading in. Have you increased your allocations to your dollar cost averaging strategy?
I've not. I've stayed consistent. Same dollar amount every month for the last, I'm what, like 14, 15 months into it now? I started last May.
Yeah, you started in April or May of last year at this peak. Yep.
Yeah. Yep.
All right.
All right. Enough about Bitcoin. We could talk about Bitcoin more. This is a fascinating development here with this ETF being launched, but let's go to what we're really here to talk about. It's the Flow Show. We like to talk about unusual options activity, see if there's anything notable, see if there's any theme we could detect, and more importantly, if we can craft a trade to take advantage of something here. So what's sticking out to you with this week's Follow the Flow report?
So the first thing that's just very evident from looking at our list this week is the oil and gas names, right? I came into the weekend thinking, shit, oil and gas stocks are in trouble. The sell-off last week in energy reminded me of the sell-off in like metals and mining stocks, which were also leaders earlier this year, back in April. We were at the CMT symposium when that was happening. And just the fervor with which they sold off, they got oversold in like 3 or 4 days from all-time highs to oversold. Never like to see that. So bears had all the momentum, right? And they were coming in aggressively, just hitting this area. Then when I look at the option splash list from last week, there's a ton of energy, right? So we got, they're buying the dip in Antero, AR, Tellurian, TELL. That's a big E&P name. BP, which is Exxon, Chevron, one of the big integrated names. And then Transocean, which is like a juicy name that traders like to use as a vehicle for leverage when they're just betting on higher prices for energy stocks. So what do you make of that? After such aggressive selling pressure, you're seeing options market participants step in and try and buy this dip.
Well, it does feel to me like a little bit of buying the dip, and I would argue that perhaps it might actually be a more conservative bet, and here's why I'll say that. If market participants were truly willing to put a lot of capital behind this being just a temporary pullback in these names, I feel like they would just go all in on the equity. Maybe what they're doing is by buying calls, they're like, okay, we're going to participate upside, but we don't want to commit too much money. We want to limit our downside because we could be horribly wrong here. And so maybe this actually is a more conservative bet. What do you think about that? What do you think of that hot take?
I think that's an excellent point, right? So basically you're saying a lot of institutions might already have plenty of exposure to energy. They see this sell-off and they think, all right, maybe we buy the dip here, layer in some more long exposure, but let's do it via options in case we're wrong.
Right. And, the implied volatility in a lot of these names has come off a bit. So it's not like they're paying through the nose. Well, actually, I'm looking at CVX right now. This vol is pretty high. What was the other ones? RIG.
I'm interested in BP and RIG.
Okay. I take back what I said. I thought it had come back a bit, but no, it's still looking pretty elevated. So, if they're making the conservative bet, they are aggressively being conservative here. They're willing to pay up for those options to limit their risk.
Okay, but hold on. Let me play devil's advocate. Look at every other sector in the stock market this year and then look at energy. Right? Why not put your chips?
I agree. I mean, this is where the strength is. I mean, energy is the only sector that's up year to date, right? Is that still the case?
Yeah, by far.
Mm-hmm. Yeah. So, I mean, it's not a terrible idea to get long here. But I don't know. I just feel like this call action here is sending a mixed signal. I don't feel like it's as bullish as it might appear at first blush. I think it's cautiously bullish.
Yeah. So my take on this is energy has really enjoyed a beautiful bull market even in a market where nothing else was participating, right? So as participation continued to thin out, right, and narrow through this year, we lost other commodity stocks, we lost other materials names, whether it's agribusiness, metals and mining, utilities had their time in the sun, real estate, everything rolled over, grocery store stocks, staples names, all that stuff. Those trades are large cap healthcare, right? It's all kind of rolled over, and it was just energy left. And as an energy bull, I started to feel far more or far less comfortable owning large positions in energy, knowing that they were the only group left showing relative strength. Now it seems like bears have finally come for energy, and they came hard and fast last week. I don't like the initial sell-off phase for these stocks. I think it spells more damage to come. So I don't like these trades at all here, to be completely honest. And I've been as bullish as anyone.
Right. Well, my initial thought was, I mean, I agree with you there, and I agree with, what I said before, but I think this is a cautiously optimistic bet. So it makes me think maybe we should position for, two-sided action. Like, let's put on like a straddle or a strangle so that if there's a big move in either direction, we could potentially participate. But with options, volatility as elevated as it is, that makes it a tough trade. We'd really have to get the timing right and get a magnified move to really benefit, to make the reward worth the risk, I think. But if you do like the story in BP, I mean, of all these names that you mentioned, BP is one of the bigger capped ones. It's a name that people know. I do not have a hard time making the case that, hey, if this thing has found a bottom, that we could go back at least and test that high from not that long ago. It was 3 weeks ago where we had the most recent high in BP.
Yeah, look at that.
It's trading at 29 and change right now. We could buy a January 30-35 call spread. I put it up here on my screen here. I put the diagram of the risk parameters. We could buy a 30-35 call spread in January and pay $1.57 for it. I don't hate it, and that would pay off if BP does in fact go and test new highs between now and January. And look, if this is the bottom and we're going to resume higher, I have no trouble believing that we'll touch 35 between now and January. That's a lot of time.
Yeah. How about this? Another way to play it. What is the option strategy that you would use to just bet on sideways, right? So these stocks came off really hard. A lot of people are betting on a bounce. I feel like sideways is
I mean, if we wanted to go sideways, then either a strangle or an iron condor makes a lot of sense here. And in that case, I would look in August options right now. An iron condor may be selling we're right around 29. If I sold I'm going to piece it together here on my screen. If I sold, say, a 25, we sold a 25 strike at the puts. And
lower pain, everybody. Yeah.
What's that?
Look at the lower pane to see the way you're crafting this.
Oh yeah, right. And sold the 35 calls on the upside, and we do $5 wide.
Yep.
We could do that for 66 cents. I mean, that's like kind of squeezing blood out of a rock. I feel like that gives us a lot of room to be wrong, though, right? So I'm looking at the chart here. We'd be short the calls, which are at new all-time high territory, and short the puts that are way below a couple levels of support here. So I feel like it has a high probability. Like if I bring up the analyze tab here,
not a very high expected return, probably.
Right. I would probably play. So I mean, it's a cheaper stock, right? It's a $30 stock. I would probably just do a naked strangle on this one. So in that case, I would sell the 25 puts and sell the 35 calls. Oops. Sorry to clumsy put this together. Look at that. I mean, we don't get a whole lot more actually. We get 88 cents. That's how cheap those calls and puts were. But it's a high probability bet, right? And that's really what we're going for here. We're not trying to hit a home run when we're selling premium. We're going for a high probability bet. And when you're short the 35, which is at new all-time highs, or the 25 put, which is below this level of support, this level of support, and this level of support, feels like a very high probability of to win, and we got a lot of obvious support levels we can lean against to manage risk if we want to be aggressive in managing our risk.
So I like this trade for a lot of reasons, even though, like you said, high probability, lower risk return than we would typically put on. But look, these stocks have been called the secular laggards, the secular leaders of this cycle. I don't want to make the bet that they're just going to plunge through this little line of support here at called 28. But at the same time, with the aggressiveness with which bears came in and sold these things last week, look at Friday's candle. You could see it right here on the far right. I mean, I also don't want to be betting on some sort of, big mean reversion move. I think sideways is a very logical, bet to make for these stocks in the next, couple of weeks to couple of months. Energy stocks went straight sideways for the entire back half of last year. They did absolutely nothing. We ended the year and we're like, oh, look how great energy was. Those gains were mostly booked in the first quarter.
Right.
They did nothing. And then you saw it again this year. So if these stocks go sideways for the next 2 or 3 quarters, it wouldn't shock me. And I also wouldn't sit here and say, oh, they can't resume their uptrend. But I just think, they're up, 50% this year while everything else is lower. You've probably made your money.
Well, look, I like what we've done here today, Strazza. We have taken the follow the flow report and we've used it in a way that might not be obvious to everybody. Is that we're not looking so much at the individual names and looking at the individual contracts that sold. We don't really care about that. We're looking holistically at it and saying, hey, there's a lot of energy names out here, a lot of call activity. We are interpreting that as, hey, maybe this is actually conservative bullish bets, not aggressive. So maybe that tells us that maybe we're going to go sideways for a little bit because we've already sold off pretty hard. So we've already had the sell off, but no one's getting too aggressive on the bounce. Maybe we go sideways. I like how we came together on this. I like this trade idea.
I couldn't agree more. And that's the beauty of this list, right? We never know exactly what was in these investors' minds when they put these trades on, and we never will, right? So you're not going to get that from this. Well, we can surmise certain things. I would also say maybe not just conservative bets from players who are already long, but what if you missed energy this whole time? You're a growth stock investor, right? And you feel like you're a little bit late to the party. You don't want to be buying a ton of common stock, put it on through calls. Like there's a number of different situations I can understand that could explain this options activity.
Well, Strazza, I feel like we've provided some value here today. I can't always say that about you, but today I can. Good job, buddy. Awesome.
Fun as always.
I'm kicking your balls there. Sorry. This has been the Flow Show. Thanks for tuning in. We'll be back next week. We're all done. Take care, everybody. Have a great trading day.